I'm here. Don't leave. Sorry, running a minute late today. Hey, welcome to the Closing Beat, everybody. Happy Friday. Today, we will cover the stock markets. This is our just quick market overview show. I'm happy to answer questions if you have any. We'll do that there at the end. We're financial advisors here at Jazz Wealth Managers. We build and manage our own expense-free funds. They're right on our website. Nothing to hide. We're the most transparent advisor out there. Ask any question. Happy to answer for you. We did a great overview last night for our customers to talk about the entire market. China, home sales, all of our portfolios, the economy, what's going on, the stats and everything behind what's possible out there. So today we'll just cover the stock market for you. That's all I have for a sales pitch today. I'm running behind, as you can tell. All the lights, by the way, I'll have to do a video over the weekend or something, but all the lights that sit around here, they're going up there. We have like 28-foot ceilings or something like that. And so we're putting all the lights all the way up to get them out of the way, make room for more fun stuff. Anyways, on the Dow, you might look at the closing price today and say, hey, only 22 points lower on the Dow, 5 on the S&P, 13 on the Nasdaq. Well, that's not so bad. But I put the chart there at the bottom right so you could see. We started with a gap lower today. That largely came overnight. They're going to blame it on the jobs numbers. Yes, they were weak, but come on, they were extremely good 2 reports ago. Jobs numbers came in at 20,000. So in February, we only added 20,000 jobs. That doesn't sound good, but let me show you how they make it sound worse. So we did 20,000 jobs. We were expecting to create 173,000 jobs, which was a lowered revised number, because the previous month we did 313,000 jobs, which was a freaking record. That was incredible. So there are more jobs than people need out there right now. And so the fact that we created 20,000 jobs, I think is fine. I don't think it's that big of a deal. What I do think was the problem, a little bit holding the markets down, especially overnight if you follow minute by minute to see. The Nikkei was down 2%. That should be up above. The Shanghai, which I don't think is up above, was down 4%. That one really kind of got rocked overnight out of China there. So look, it's trade data. Trade data from China is hurting them, holding them back there. Although there's some argument, the Chinese New Year, that's an extended holiday, what's really going on? Let's give it, they're sort of giving them a pass on this one. We covered all the trade data last night for our customers there. Very detailed. Look, there less imports, less exports, weak trade. So that's enough of that one anyways. Anyways, if you looked at that, you might have thought, well, it's just a small down day, but in reality, it was a pretty decent down day. We're going to cover it here actually right now on the charts. So let's look at the S&P 500. This is officially the worst week of the year. Not a problem because the year has been incredibly strong. So a little pullback, not a big deal. Every day we saw more and more of a little bit of a pullback there. Today we started lower. We sold off a little bit. We found buyers throughout the day. It's letting you know. And actually I'll show you a few sectors that did the same thing. Tried to sell off, but found buyers. People said enough is enough. That's a good dip for me. They wanted to, or for them, and they wanted to buy. So you got a little bounce in the S&P 500 today off of lows. Not a bounce to give it a positive day, but a bounce off of lows. Nasdaq also bounce off of lows today. It gapped lower overnight because of the Chinese news. And the jobs numbers, of course, didn't help, but found buyers almost immediately. The Russell 2000, we've been talking about that all week, being weaker, right? Sort of leading the way to the downside. If you go back to last week's class, the Russell hurting us here on the downside today. Same thing. Although, look, very small. It was a very small move. Gapped lower, found a little bit of buyers in there throughout the day. Now, if we go through the different sectors here, well, let's just look at the price of oil. We'll look directly at the futures contracts today. So here's crude oil. So we've been talking about this trading inside of a range. Did that support hold or what? So far looking pretty good. It shows that we're looking at the same area that everybody else is. You've got a sideways range here stuck about 58 as your high, and then you've got this low down here about 55, and that's what everybody's using as support here in the short term. So it's perfect. It's confirmation that everybody's using that as support. Until you break below or above, you really have nothing new going on with oil. So the sort of moral of today is support. Identify support, and you maybe had a good day. Transports, we talked about this yesterday. It was selling off in a more aggressive way. It sold off every day this week, by the way. But we were talking about it coming down to this 50-day moving average. Today, what happened? It came down towards the 50-day. You saw the volume start to increase right there. If you follow on a shorter term time frame, you saw volume come screaming in there. What was that? That was buyers trying to come and buy off the 50-day. That also lets you know you're looking at the same thing as everybody else. Retail. You follow this one here. Nice little pullback. What happened? Hit the 50-day moving average. Volume came rushing in right at that level. Call it the algorithms, call it the day traders, whatever you will. But you see that same little bounce there. And this is nothing new. You can look through different areas. Energy came down to the 50-day today. People wanted to buy that. I think metals and mining, that one broke through a little bit today. So we'll see what happens there. You got the price of gold a little bit higher. I don't know what held that back today. Was it copper? I'll have to look at that. Metals and mining stocks weak on the day though. But as you look around, you see the same thing. If you have, remember on the way up, by the way, we talked about the different sectors hitting the 200-day moving average and some of them lagging behind. Now what do we have? We have a pullback. Everything's coming back to the 50-day moving average. But look at something like consumer discretionary. It's not there yet. Yeah, it bounced a little bit today, but it's not quite there yet. So now you got the same thing just on the way down. On the way up, we're like, oh, this sector hit the 200, this sector blew above, this one's still behind. Now on the pullback, we go, okay, there's a different way to look at this though. When you see this now, consumer discretionary not pulling all the way back, compare it to, like if you got to pick a sector here, compare it to the metals and mining. Which one do you think is stronger? You might like the discount here a little bit more, but what happened? Metals and mining sold off more than most of the other sectors, but if we go look at consumer discretionary stocks, they haven't sold off as much. That's called relative strength. So if you have to compare sector against sector, you want to go with the consumer discretionary area. If you have to compare it to transports are a little weaker. You got a little bit more support there. It's pulled back more. So still, consumer discretionary stocks show up as relatively strong. Was healthcare the other one? Healthcare is similar. That one is a bit of a jumbled mess. That's got a lot of news this week. That was a tough one to keep up with this week. There was a ton of news there. Also, communication services. You look at this and you go, this hasn't even pulled back. It's stuck up here in this range. Relative strength. So you're very easily able to start sorting through the sectors, find something you like if you're a short-term trader. If not, it's just kind of cool to keep track of this stuff. Anyways, stocks to cover. Big Lots higher by about 14% on the day, breaking out of this little range here. No doubt a lot of this was short covering and the day traders in there today. New long positions ready to play along. The next resistance area is basically at the 200-day moving average. So actually, it's quite a bit higher. Yeah, about up back to 39. That's pretty good. Earnings better than expected. Revenue better than expected. Sales also really good for Big Lots. I don't know why. They're so expensive, and the one where in my area here is rather dumpy. I don't know, but they did really well. So it was good earnings all across the board. Everything looked pretty good. ExxonMobil was down a little bit today, 1.5%. Remember earlier this week they announced a $6.5 billion capex. It's just a fancy way of saying that they're going to invest in themselves to try to grow the company. So if you saw that was a little hurtful earlier in the week. The company was downgraded by Cowen, and I'm trying to see. They talked about their dividend commitment as being a negative thing, that investors would be more interested in free cash flow. And since they're spending some of that cash flow on their dividend as well as investing in a business, Cowen downgraded them, said that's probably not going to be a good move. I don't know. I guess we'll see. Costco shares were higher today. One of the bright spots here in the Nasdaq. You got 5% gain on the day. Very strong. Also breaking above a downtrend here. So if you happen to draw lines on your chart, officially breaking through a rather sloppy downtrend. Company beat on earnings. Revenue missed a little bit, but sales were strong. And online sales actually ticked up higher, which sounds weird for Costco. How do you buy like 100 bicycles online? I don't know. It was pretty cool. So online sales, although they said they will be getting better in online sales, just a cool company overall. It's like you know how some companies you're like, I don't want to invest in them. I don't like leadership. I don't like what they do to their employees. I don't like how they handle health insurance, whatever. You never hear that about Costco. You just always hear people talking nice about Costco. Yeah, I don't know. It just kind of hit me there. So also they announced that they're going to raise their wages for the second time in a year, by the way. They're bumping it up to $15 and $15.50 an hour if you want a job at Costco, do a little part-time work there. What else do we got? Vail, the symbol's actually Mountain, MTN, if you want to follow along. These are the ski resorts, actually. So stock was higher by about 7%. They actually lowered their guidance. They said that they had fewer visits during that pre-holiday period, especially at Tahoe and Whistler. I don't really follow that. I'm in Florida, so I'll be honest, I don't know a lot about this company. They beat on earnings by a friggin' mile, 19 cents better than expected, and they raised their dividend by 20%, if that helps. Let's move on to pot stocks. Not that I'm more familiar with these. So Tilray, only higher by about 0.5% today, although I think my data's a little off on this one. That doesn't seem accurate. Tilray. So Jefferies started coverage on this one. So a lot of these big analysts are starting to cover or analyze these pot stocks. And so little by little, I just try to point out when there's a new company analyzing it, sort of lends credit to the sort of legitimacy of the stocks and if they're worth tracking or not. So anyways, Jefferies didn't have anything good to say. They put their initial rating at underperform, which is not good. It's not a buy. It's not a stock they think is going to outperform. It's not technically a sell, but they do think it's going to underperform. They said the company has inferior positioning in certain parts of its business compared to its peers. I would agree. I think you have some of those other pot stocks out there that visibly have their game together. Tilray seems like a lot of hope and dreams and stuff at the moment if you really look into it. Caesars Entertainment, this is a casino. Stock was only lower by 1.5%. Carl Icahn increased his position of 15.5% of the entire company. 15.53% of his fund. Part of this was because, I don't know how far, if you go back, he wanted to nominate his own board members if he were to invest in the company. He won that, by the way, so therefore he decided to invest more. Tesla, 2.75% higher, sort of trading in no man's land here. They got some credit from the Chinese to build their Shanghai plant, $521 million worth of credit, by the way, to continue the Gigafactory over there in Shanghai, which is going to cost a total of $2 billion. I believe it's $2 billion, by the way. So should be done by May. Is it May? Yeah, May. Sprint and T-Mobile, if you follow these two, they're working on a merger. So Sprint and T-Mobile want to get together, mainly the T-Mobile side. Anyways, the FCC that has they did a 180-day sort of open, they don't call it open outcry, where you can go comment, right? You can express your concerns or whatever. They decided to put that on hold, give it an extra 3 weeks for people to comment on this thing. So whether you love it or hate it, it's a huge merger, $26 billion and change. So anyways, those stocks in the news and creeping back into the news. Probably be in the news over the next 3 weeks. GlaxoSmithKline, not really a mover stock-wise today, but their experimental HIV, actually they have 2 drugs that are in late-stage studies, not phase 1, phase 2, but late-stage phase 3 for HIV drugs that are actually showing great results. So I don't know that means you want to invest in them, but I think that's cool. American Outdoor Brands. These guys, you may know them as Smith & Wesson. They make guns. So gun maker and other stuff too. 12% lower on the day. A rapid sell-off over the last couple days here. Earnings beat just by a little bit. Revenue was a little bit better than expected. However, this is fancy financial trickery here. That is based on adjusted numbers. So they beat by 4. Last night, if you're one of our customers, we talked about the analogy of, beating the expectation by just a little bit. That is beating a lowered bar. So it's still not impressive. They overall have a quarterly loss. Nobody fell for it. Everybody saw right through that today, down 12%, and has, another 10% to go before it hits lows, maybe a little bit more. All right, that's it. Lastly, Fizz. Do you drink LaCroix? like the hint of flavor in those drinks. I'm not a big fan. The CEO basically went nuts, called the lawsuit against him injustice. Good for him. He's going to be painted as sort of losing his mind. Oh my God, is Elon Musk? Remember that? Is Elon Musk holding it together or whatever? This guy will be painted the same way. He's just not as famous. No, he's just passionate about his business and feels very strongly against the lawsuit. People claiming he's putting unnatural ingredients in something, but claiming they are natural. I'm not going to get in the middle of that. I just wanted to review it for you so you can make your own decision. So, if you work for the U.S. government, you probably just got that letter. They are very clear. I got a ton of emails from people going, hey, just want to make sure you're not going to invest me in any pot stocks. I'm not allowed to. Government telling their employees what to do, or if you're in the military. Yep, I think that went. Brandon? What is that? Earlier this week? Yep. You don't like the red numbers there, do you? Yeah, I agree. We could probably make them brighter, bolder, or something. Well, hey, anyways, it's back to work for me. We got a ton of work to do here this weekend, hanging the lights and everything. I'll do a little video or something so you can see if you're even interested. I hope that helped you today. If that helped you in some way, hit the subscribe button. If you're not a customer and you like what we're doing here, maybe you leave a review. I'm not allowed to ask customers to leave a review, but it occurred to me I could ask you to leave a review on Google or Yelp if I've helped you in some way. Let people know. If there's room for improvement, let them know that as well. If you're one of our customers, I did not just ask you to leave a review and will not be asking you to leave a review because it's not allowed. Turns out you get in a little bit of trouble if you ask your customers to leave a review. So non-customers, if you wouldn't mind. And if you're a customer and you happen to think about it, I don't know what you're going to do, but I didn't ask you to do it. Anyways, have a good weekend. I better stop now. Enjoy. See you later. Oh boy, gonna get myself in trouble.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.